What if the crypto that creates the next wave of millionaires isn't Bitcoin? While everyone is glued to Bitcoin's every move, its dips, its surges, its next halving, a massive shift is happening right under our noses. A new class of digital assets is rising, and it's powered by the single most transformative technology of our time: artificial intelligence. This isn't just a concept from a sci fi movie. It's a real, tangible, and rapidly growing convergence of two exponential technologies: AI and blockchain. This combination is quietly building the foundation for the next generation of the internet. We're not talking about meme coins or dog themed tokens with no utility. These are decentralized AI projects creating real world value and solving problems that the big centralized tech giants either can't or won't. For most investors, finding a genuine 100x return in today's market feels next to impossible. The blue chip assets seem to have settled and the narratives are crowded. It feels like all the big discoveries are behind us, but that's only if you're looking in the rearview mirror. The real opportunities, the asymmetric bets that can fundamentally change your financial future, are found by looking at what's coming next. And what's coming next is a technological revolution. In this video, I'm going to break down exactly what this convergence is and why it's a trend far too big to ignore. I'll show you the specific projects I believe have the potential to not just participate in this revolution, but to lead it. In doing so, they could generate returns that dwarf traditional crypto investments and, yes, maybe even outperform the king of crypto itself, Bitcoin. Before we get into specific projects, it's essential to understand the monumental shift that's underway. For the last decade, we've lived in an internet dominated by a handful of tech giants: Google, Amazon, Meta, Microsoft. They control our data, dictate platform rules, and centralize the power of artificial intelligence. This is the old world, a world of digital walled gardens. Think of it as a single massive library controlled by one librarian who decides which books are available and who gets to read them. Now imagine a different world. Instead of one library, picture a global, interconnected network of countless libraries, all able to communicate and share information seamlessly and securely. No single librarian has control. This is the promise of a decentralized internet, and it's being built on blockchain technology. But here's where it gets really interesting. What happens when you give every single one of those libraries its own super intelligent AI librarian? That is the convergence of AI and blockchain. Blockchain provides trust and transparency, creating a system where data can be shared securely and value can be exchanged without a middleman. Artificial intelligence provides the intelligence to analyze that data, automate complex processes, and create services that were previously unimaginable. When you combine them, you get something entirely new: decentralized AI. This isn't just about making AI more accessible, it's about fundamentally changing its nature. Instead of AI being a tool controlled by corporations to maximize profits, it becomes more like a public utility, a decentralized global brain that anyone can access, contribute to, and build upon. This unlocks the ability to create AI services owned by their users, secure data sharing for powerful AI models, and autonomous economic agents, AI programs that can own capital and transact on a blockchain. This isn't a minor upgrade, it's a paradigm shift on the level of the internet itself. We are moving from an internet of information to an internet of intelligence and value. The economic potential here is staggering. While predictions vary, some analysts see the AI driven economy growing into a multi-trillion dollar market. Capturing even a tiny fraction of that value could create more wealth than we have ever seen in the crypto space. This is the big idea you can't afford to ignore. So, where is this revolution taking place? It's happening in two key areas set to redefine our digital and physical worlds. First, through dedicated AI integrated blockchains, and second, through something even more tangible called decentralized physical infrastructure networks, or DPIN. The biggest problem with AI today is its centralization. The most powerful models are controlled by a few trillion-dollar corporations. They own the data, the computing power, and they set the agenda. This creates data monopolies, censorship risks, and high barriers to entry for smaller developers. Decentralized AI flips this model on its head. By using blockchain, it creates an open global marketplace for AI. Imagine a world where anyone can contribute their data, computing power, or AI algorithms and get paid for it in crypto. This democratizes every single layer of the AI stack. At the forefront of this movement is a project representing a monumental collaboration: the Artificial Superintelligence Alliance, ASI. The ASI Alliance isn't just one project, it's the strategic merger of three pioneers in the decentralized AI space: Singularity Net, Fetch.ai, and Ocean Protocol. This merger, finalized in mid 2024, was a calculated move to create a decentralized AI powerhouse capable of challenging big tech. To understand the power of ASI, you have to look at what each piece brings to the table. First, you have Singularity Net, AGIX, founded by the renowned Dr. Ben Goertzel, one of the godfathers of the Artificial General Intelligence (AGI) movement. SingularityNet's core contribution is its decentralized AI marketplace, an app store for AI algorithms where developers can create, share, and monetize AI services. Next is Fetch.ai, FET, which specializes in creating autonomous economic agents. These are intelligent software programs that can act independently to perform tasks like booking travel, optimizing supply chains, or managing energy grids in a decentralized economy. Finally, there's Ocean Protocol, OCEAN, which solves one of AI's biggest challenges, the data problem. Ocean created a revolutionary framework for decentralized data exchange. It allows data owners to monetize their data without giving up control or privacy through a technology called compute to data, where AI algorithms train on data locally and only the results leave, not the raw data itself. By merging these three into the Artificial Superintelligence Alliance, they created a cohesive ecosystem powered by the ASI token. SingularityNet provides the AI brains, Fetch.ai provides the autonomous agents to execute tasks, and Ocean Protocol provides secure access to the data needed to make them intelligent. Together, they form a closed-loop system for creating, deploying, and monetizing decentralized AI. However, it's crucial to acknowledge the risks. Large-scale decentralized collaborations are incredibly complex. In October 2025, Ocean Protocol announced its withdrawal from the alliance to pursue an independent path. Shortly after, Fetch.ai's CEO made public allegations regarding the handling of community assets, which Ocean's team has disputed, pointing instead to a breakdown in the agreed upon governance structure. This ongoing dispute highlights the inherent governance challenges in such ambitious projects and has created uncertainty, contributing to the underperformance of AI themed tokens compared to Bitcoin in late 2025. Even with this turmoil, the underlying technologies of Fetch.ai and SingularityNet, which form the core of the continuing ASI project, still represent one of the most advanced efforts to build a decentralized AI infrastructure. Pillar 2: the physical world on the blockchain, DePIN. Now, what if this revolution wasn't just digital? What if you could use blockchain and crypto incentives to build and operate real world physical infrastructure? This is the second pillar, DPIN, which stands for Decentralized Physical Infrastructure Networks. This is arguably one of the most underrated and potentially explosive sectors in crypto. DePIN projects use tokens to incentivize people all over the world to contribute their hardware and build out infrastructure networks. Everything from wireless networks and cloud computing to energy grids. Instead of a single telecom company spending billions on a 5G network, a DePIN project can incentivize millions of people to set up a small hotspot, creating a crowdsourced network that is often more resilient and cost effective. The scale of this opportunity is massive. The research firm Masari has projected that the DePIN market could grow to become a $3.5 trillion industry by 2028. It's the ultimate bridge between the digital world of crypto and the physical world. The undisputed poster child for the DePIN revolution is Helium, HNT. Helium started with an audacious goal: to build a global, decentralized wireless network for the Internet of Things, IoT. Helium's solution was to let anyone buy a simple hotspot, provide wireless coverage to nearby IoT devices, and earn HNT tokens in return. This model created a flywheel effect. More hotspots create better network coverage, which attracts more users who in turn pay data fees that are used to reward hotspot operators. It's a self-sustaining economic loop. Helium has since expanded into the much larger mobile data market with Helium Mobile. Using the same principle, they incentivize the deployment of 5G hotspots, offloading mobile data from traditional carriers. As of late 2025, Helium Mobile has surpassed 500,000 subscribers and has partnerships with major carriers like T-Mobile and Telefonica. This demonstrates its real-world utility and adoption. Helium proves that crypto can be used to coordinate human activity at a massive scale to build tangible, valuable things. And it's just one example. There are DePIN projects emerging for decentralized cloud storage, GPU rendering for AI, and even data collection. These two pillars, decentralized AI and DePIN, are the foundational layers of the next internet. They are not competing narratives, they are symbiotic. Decentralized AI needs the distributed computing and data resources that DPINs provide. In turn, DPINs can be optimized and managed by the autonomous AI agents developed on platforms like the ASI Alliance. Now that you understand these two monumental shifts, let's break down the top projects that I believe are positioned to deliver truly asymmetric returns. Part 3, the top contenders to outperform Bitcoin. We've established the thesis: the convergence of AI and decentralized infrastructure is a potential supercycle. But a thesis is useless without actionable ideas. So let's analyze the specific projects that I believe are the thoroughbreds in this race. Project 1, the AI behemoth, the Artificial Superintelligence Alliance, ASI. What it is: ASI is the powerhouse token of a decentralized AI collective born from the merger of Fetch.ai and SingularityNet, with continued interoperability with Ocean Protocol's technology. It stands as the most ambitious open source effort to create a full stack, decentralized alternative to the AI monopolies of big tech. The problem it solves: ASI directly attacks the centralization of the AI industry by tackling three core problems. First, the monopolization of AI models, which SingularityNet solves with its open marketplace. Second, the lack of intelligent automation, which Fetch.ai solves with its autonomous agents. Third, the data accessibility crisis, which Ocean Protocol's framework addresses by enabling secure data sharing. The technology breakdown: SingularityNet's marketplace. This is a functioning platform where different AI algorithms can be listed for use, interact with each other, and create a self-organizing network of intelligence. Fetch.ai's agent framework. These intelligent agents live on a decentralized network and can be programmed to perform tasks on behalf of individuals or organizations, from booking flights to managing industrial logistics. They are the hands and feet of the decentralized AI world. Ocean Protocol's data economy. Even with its departure from the Alliance, Ocean's compute-to-data model remains a crucial piece of the puzzle. It allows AI models to train on sensitive data without that data ever being exposed, unlocking the world's most valuable private data for AI training. Why it could outperform Bitcoin: massive total addressable market, TAM. This is the key. Bitcoin's market is the global store of value. Artificial intelligence, however, is a foundational layer for all future markets. The ASI token is a direct claim on the infrastructure that could power a significant portion of this new economy. Its potential market is arguably orders of magnitude larger than a pure store of value. Network effect and synergy. The merger created a powerful network effect and technological synergy, offering an all-in-one solution for developers building in decentralized AI. Real tangible utility. The ASI token has immediate and growing utility. It's used to pay for AI services, fuel autonomous agent operations, and participate in data ecosystems. As network usage grows, so does the intrinsic demand for the token. It is a productive asset. Asymmetric bet. While Bitcoin is a mature asset, decentralized AI is in its infancy. This makes ASI a classic asymmetric bet. The downside is your investment, but the upside, should it capture even a small percentage of the future AI market, is astronomical. The recent governance dispute and market downturn have suppressed its price, potentially creating an attractive entry point for those who believe in the long-term vision of its core technology. Project 2, the physical world titan, Helium, HNT. What it is: Helium is a decentralized wireless network that incentivizes individuals to deploy and operate a crowdsourced network for both IoT devices and 5G mobile connectivity. The problem it solves: traditional telecommunications is an industry of oligopolies. Helium solves this by decentralizing the network building process, lowering connectivity costs, and creating a community-owned alternative for mobile data. The technology breakdown. Helium's model is genius. It has two main components: hotspots, hardware devices that people purchase and install to provide wireless coverage; token incentives. Helium's blockchain, which has migrated to Solana for improved scalability, constantly verifies that hotspots are providing legitimate coverage and rewards operators with HNT tokens. Why it could outperform Bitcoin: first mover advantage in a massive new category. Helium is the undisputed leader in DePIN. Just as Bitcoin popularized digital scarcity, Helium proved the DePIN model works at a global scale, giving it a powerful brand and network effect. The DePIN sector is projected to be a multi-trillion-dollar industry, and Helium is its flagship project. Tangible, understandable value proposition. Many people intuitively understand the value of a wireless network. You are rewarded for providing a real world service, connectivity. This tangible link to physical infrastructure is an easier investment thesis for many to grasp. Deflationary tokenomics and real revenue. HNT has a fixed maximum supply and periodic halvings, just like Bitcoin. More importantly, HNT has a burn mechanism. To use the network, companies must burn HNT to create data credits. As network usage grows, HNT is permanently removed from circulation. In late 2025, Helium also announced plans for an automated buyback mechanism using subscriber revenue to repurchase HNT from the open market, directly linking revenue to token value. Institutional validation and partnerships. Helium is not just a retail phenomenon. It has active partnerships with established telecommunication companies like T-Mobile and Telefonica to offload data traffic. This institutional validation lends enormous credibility and signals that Helium is a serious long-term infrastructure player. Project 3, the infrastructure kingmaker, Celestia, TIA. What it is, Celestia is a pioneering modular blockchain designed to do one thing exceptionally well: provide secure and scalable data availability for other blockchains. The problem it solves. Traditional monolithic blockchains try to do everything at once: execution, consensus, and data storage. This leads to high gas fees and congestion. Celestia unbundles the blockchain, focusing only on being a hyper-scalable and cost-effective layer for storing and ordering transaction data. The technology breakdown, data availability layer. Celestia is a bare-bones chain focused only on making data available. It doesn't execute complex smart contracts. Data availability sampling, DAS. This is Celestia's breakthrough. It allows even light clients like a mobile phone to verify that all the data for a massive block is available without downloading the entire thing. This is what will allow Celestia to scale its block size to unprecedented levels. The modular ecosystem. Developers can now build specialized execution layers, roll-ups, for gaming, DeFi, or social media, and simply post their data to Celestia for security. This makes launching a new blockchain exponentially faster and cheaper. Why it could outperform Bitcoin, the ultimate picks and shovels. Play. This is the most crucial argument. Celestia isn't competing to be the best dApp. It's positioning itself as the foundational infrastructure that thousands of future blockchains will be built on. Investing in TIA is like investing in the company that sells picks and shovels during a gold rush. Its success is tied to the growth of the entire modular ecosystem. Solving the core scalability trilemma. Celestia's modular approach is one of the most promising solutions to the blockchain trilemma: decentralization, security, and scalability. By separating layers, it allows for massive scalability without sacrificing decentralization and security. Value accrual through demand for block space. The TIA token is essential. Rollups must pay fees in TIA to publish their data to Celestia's block space. As the number of rollups built on Celestia grows, the demand for its finite block space, and therefore TIA, will rise. Ecosystem growth and developer adoption. Celestia has already attracted significant investment and developer interest. Projects in the Cosmos and Polygon ecosystems are integrating Celestia for data availability solutions, signaling that it's becoming a core piece of future crypto infrastructure. These three projects, ASI, Helium, and Celestia, represent a trifecta of bets on the future. ASI is a bet on the intelligence layer, Helium on the physical infrastructure layer, and Celestia on the foundational data layer that will underpin it all. Part 4, the anchor to reality and managing risk. The projects we've discussed represent the bleeding edge of innovation. But for this engine to run smoothly, it needs to be anchored to the real world and trusted by major financial players. This brings us to two final critical trends: the tokenization of real-world assets, RWAs, and the move toward regulatory clarity. First, RWAS. This is the process of creating a digital token on a blockchain to represent a traditional asset like real estate or bonds. It bridges the multi-trillion-dollar world of traditional finance with the efficiency of crypto. The RWA tokenization market has grown significantly, reaching over $24 billion in 2025. Analysts at firms like Boston Consulting Group and others offer a wide range of projections, with some seeing the market swelling to several trillion dollars by 2030. And the biggest names in finance are leading the charge. BlackRock, the world's largest asset manager, has its own tokenized asset fund. Goldman Sachs and BNY Mellon are also actively tokenizing assets. When Wall Street titans are building on this technology, it sends an undeniable signal. Crypto is becoming the backbone of the future financial system. Now let's address regulation. For years, uncertainty held the industry back, but the tide is turning. In 2025, the US SEC and CFTC have signaled a more collaborative approach, issuing joint statements and launching initiatives aimed at creating clearer rules for the digital asset industry. This shift from regulation by enforcement to creating clear frameworks gives institutions the confidence they need to invest significant capital. We're already seeing the effects, with payment giants expanding their on-chain services and major financial institutions getting approvals for crypto custody. This increasing regulatory clarity doesn't eliminate risk, but it dramatically reduces one of the biggest threats that has loomed over the industry: building credibility and managing risk. After all this bullish talk, we need to ground ourselves in reality. As exciting as these projects are, this is not financial advice. The world of crypto, especially this innovative frontier, is inherently high risk. These are early stage technologies. The ASI Alliance's public dispute is a perfect example of the governance risks involved. Technology can fail, competitors can emerge, and regulations can shift. The prices of these assets will be extremely volatile. You must be prepared for violent swings in both directions. With high potential reward comes high risk. Always do your own exhaustive research. Read the white papers, understand the tokenomics, and never invest more than you are willing to lose completely. The asymmetric bets we've discussed are called that for a reason. They have a real chance of going to zero. Your job is to manage that risk, size your positions appropriately, and think with a long-term horizon. The information here is a starting point for your own journey of discovery, not a finish line. So, while the masses are mesmerized by Bitcoin, the foundations of the digital world are shifting. We've seen how the convergence of AI and blockchain, led by projects like the Artificial Superintelligence Alliance, is creating a new decentralized layer of global intelligence. We've explored how DePIN projects like Helium are using these principles to build the physical world of tomorrow, proving crypto's tangible value. And we've understood that for this revolution to happen, it needs a new foundation. Infrastructure plays like Celestia are providing that bedrock. These trends are being accelerated by the tokenization of real-world assets and de-risked by the move toward regulatory clarity. The convergence of AI and blockchain is a trend that's simply too big to ignore. The question is no longer if this transformation will happen, but who the pioneers will be and who will have the foresight to be a part of it. The next wave of wealth in crypto won't come from chasing yesterday's winners. It will come from identifying the foundational protocols of tomorrow's world. Now, I want to hear from you. What are your thoughts on AI crypto? Which of these projects are you most excited about, or are there others on your radar? Let me know in the comments below. And if you want to stay ahead of the curve on the latest crypto trends, be sure to subscribe and hit that notification bell. We are just scratching the surface here, and you don't want to miss what's coming next.